Hey guys, welcome back. My name is Fahd Dawood. I talk about real estate, Dubai, sometimes very specifically internationally, your and my life and our path to financial bliss. Look, I wanted to quickly talk about the state of the market at present, Dubai and internationally, because Dubai in a globalized world gets affected by events internationally, and because Dubai's real estate market reflects what's happening internationally, therefore what's happening in Dubai generally can be applied internationally to the real estate market as well, to an extent, with variances in each specific market. So there is an opportunity in the current market scenario, and there's some people who are losing out, and I want to talk about that. Before we go further, hit the subscribe button, press the bell icon. It helps me increase my subscribers, and I'll become an official YouTuber to my kids, which is cool. They're happy with me, makes me happy, and I get to create tons more content that helps you out. Okay, so back to the Dubai market, or the real estate market in general. Okay, the real estate market, or real estate as an asset, there's a couple of points that you need to understand a little bit, and then I'll get into what's currently happening. Real estate essentially or generally is a lagging asset. Okay, it's a lagging asset. So whatever happens in the market today, you'll see it reflected in real estate prices 3 months to 6 months from now. Okay, it's not like the stock market. There isn't a real-time ticker that's going with real prices that are being shown. Okay, and sometimes the stock market, obviously, as you guys know, sometimes it could fall in a day 20%. 30% in a day, right? Because on the back of specific news that might be horrendous or bad, or if there's really good news that comes out into the market, stock market might rise in a day 20-30%. Real estate doesn't react to news the same way. It's a lagging asset, therefore it reacts in a larger space of time. The way I try to explain this to myself and to my investors, clients, friends, whoever ask me about the market, I always tell them, look, imagine real estate as an asset being a large ship tanker, okay? The tanker that carries containers globally at sea. And imagine how, if it had to make a right turn, how would it make a turn, right? It's a large tanker with thousands of containers, 20,000 plus containers on board. Doesn't do like a Ferrari U-turn or a right turn, right? It does like this long turn. I don't know how long it takes, maybe a couple of hours, maybe a couple of days, but it takes a long time for it to turn around. And that's how the real estate market operates. It's a lagging asset, therefore good news today will start reflecting into the market 3 months, 6 months, sometimes 1 year from that period. Bad news today will start reflecting into the market 3 months, 6 months, sometimes a year later down the road, right? Why is that? Because there is no real market like the stock market where prices are getting quoted instantaneously, and there is a big, huge human element with real estate prices, and there's individual people who are making these decisions, right? So in a place where there's like, let's say 1,000 villas, and in that 1,000 villas there's 100 that are up for sale. Now let's say there's bad news in the market for whatever reason. Out of that 100, perhaps there's only few, like 5, who are in urgent need of cash. The rest 95 are not in urgent need of cash. Perhaps their urgency is going to be really urgent 30 days down the road. Perhaps it's just come to the market, right? The 5 that are in urgent need of cash and have been wanting to sell that house, for instance, for 3 to 6 months now, as soon as bad news hits, they're going to make a call and make a sale immediately. Those who've just come to the market to sell, they're going to take their time. They're going to prolong their decision making, and that's why it's always lagging. And sometimes those who prolong their decision making and aren't basing their decision on current market scenario will suffer in the long term. Okay, so what's the situation right now? Dubai kind of went into lockdown March 28th, I think we started with our soft lockdown. Like you couldn't be outside beyond 8 to 2 p.m. Okay, that was the entire UAE, Dubai as well as all the other Emirates. And then we went into from March into April, we went into full lockdown, which was like, I think it got squeezed down. Even from 2 p.m. you couldn't be out at all, and then we had 2 or 3 weeks of full lockdown, and then May, and then I think June things started opening up a little bit, right? And July, now we're kind of like at 100% full capacity in terms of government offices. Everybody's returned to work. The malls have kind of opened up. Even if you're over 60 or under 12, you can still go. So my kids are kind of happy about that. The traffic's back, the metro's back. Things are now coming back online, even though we're into the summer, right? Now here's what happened as soon as we went into strong lockdown, like complete lockdown. There were people who were sitting on the sidelines with large amounts of cash. Either they had large credit lines from banks, or they had their own cash that they wanted to deploy. And they came into the market thinking, okay, look, now's the time to pick up assets. And prices which were like, for instance, at let's say 800,000 or $1 million, so let's say about $250,000, they wanted to grab assets at 30 to 40% below market rate, and they wanted to make offers like, so anything, let's use $1 million as an example. Anything that was priced at $1 million, the bulk investors came into the market trying to pick up those assets at $400,000 or $600,000. Sorry, let me correct myself. At $600,000, because that's 40% less than $1 million, right? So if an asset value was $1 million, they wanted to pick it up at 600 because they assessed two things that are happening in the market. A lot of job losses might happen, so a lot of people will leave. So whatever rental income these assets were generating, they assessed pricing at 600 because they thought that, you know, rental income is going to get squeezed further, number one. Number two, the job losses, people are just going to leave. And they, number two, there's a ton of inventory coming into the Dubai market. So they figured, look, we're going to deploy our cash, but we're going to hedge against these two things. Job losses that will cause an extreme rental decline, and the intense amount of inventory that's coming into the market. So they wanted to hedge against this. Now, both of these aren't new. Dubai's kind of faced this before during the global financial crisis. One thing that a lot of people don't understand, that Dubai as an emirate sits like 1 hour away from Abu Dhabi and 10 to 15 minutes away from Sharjah and 20 to 25 minutes away from Ajman. So as soon as Dubai rents go down, people from Sharjah and Ajman move to Dubai because Dubai just has a higher standard of living. The other emirates are great to live in, but Dubai gives you a higher standard of living. You know, most people fly out from here, even though Sharjah and Abu Dhabi have their own airport, and they're fairly busy as well. It's just people like to come back to Dubai. It's like, you know, people like to come to the main city, right? And that happens. And as soon as they come, rents fall down for them to move here, but then inventory starts getting absorbed, and in a 2-year time span, we've generally seen prices go up again, right? That's number one. Number two, job losses. This is the current scenario of not just Dubai, but the global economy, right? Economies are going to adapt. There's a lot of technology that's going to come in. People are going to lose jobs anyway. But Dubai is open for business. You guys got to remember that Dubai sits in a 4-hour flight radius from 4 billion people. And amongst all countries out there, Dubai is the most open. Like, I can't think of any other country that is so open for business. I think Singapore is, but it's not easy to get there. Everybody can't get a visa and can't just land in Singapore and start business, right? Dubai is that one country that differentiates. The UAE allows anybody to come here as a visitor, as a tourist, as long as you don't have a criminal background, as long as you're not a convicted criminal, you can come here and do business and then kind of go on your way. Okay, so I sidestep. Let me go back to my main point. So the 3 months of the extreme corona lockdown, so March, April, May, prices went down because people, I think, panicked as well, okay? And these buyers were giving ridiculously low offers to sellers. If they felt that this thing's just going to go forever, sellers were selling and just exiting the market super fast, right? What's happened since Dubai opening up? Prices have kind of like gone up again. I wouldn't say gone up, okay? So let me recorrect myself. Prices have stabilized to back where they were. So if something was priced at $1 million, now the sellers are looking to go into the market and make a deal at $850,000 or $900,000. Things have kind of like stabilized. Now, don't get me wrong. Long term, short term, long term, a year and a half, 2 years, I expect volatility to be there in the market, but the markets are in flux, okay? They're in flux. So, and everybody gets affected differently. If you were a buyer who's looking to get bulk deals at super discount prices, you're out of luck at the moment. You're gonna have to wait another 3 to 6 months to see where the market goes, or you take a punt and meet the seller at their prices. So if you wanted to pay $600,000 and the seller is only willing to come down to $750,000 from his $1 million, strike a deal, maybe at $650,000, maybe at $700,000. It's up to you to strike that deal and strike that balance. If you are a buyer who's been in the market for the last 3 to 6 months and you're looking to own an apartment or a house for one that you want to live in, this is a good time for you to go in and actually buy. Don't wait for prices to go further down. Sellers have kind of like regrouped and are holding on prices now. They're not coming further down. You know, in Dubai and internationally, prices of not just real estate, but the stock market as well, get affected by the mood of the people. The airports are opening. Okay, I'm not saying that we're out of the sea outbreak situation. I don't know. Vaccines are going into human trial. If things turn around fast in the next 3 to 4 months, you'll see prices stabilize at that level. You don't want to miss out on that deal that you've been hoping and now is available in the market. You want to strike the deal and get it done with. If you are a seller, here's some news for you. Look, I expect volatility to be there in the Dubai international real estate market for a year and a half. If you are a seller, it's your job to make a deal and exit out of the dog assets, the assets which are really bad, poorly maintained, high cost of maintenance, don't get you a lot of rent above 5% rental income, okay? These are assets you want to sell, appoint one broker who you trust, get all the offers in, negotiate hard and exit as soon as possible because you've just been given a breather. All the best. Hit the subscribe button, press the bell icon. If you want to work one-on-one with me, down below are the details. Either my number is going to be there or a form for you to be able to get in touch with me directly. If you've got a comment or a question, put it down in the comment section. Love to answer them. If you want to work, if you have a general question, I'll answer it on YouTube. Very specific stuff that you want to work with me very specifically. Happy to do that. I'll explain that in the process. Just hit the button down below on how to get in touch with me. Ciao for now. See you soon. Bye.